Hey there traders, welcome back for episode 56 from the stockbandit.tv. I sure hope that your trading week is off to a nice start. So one thing that I'm asked quite often, and it's something that I saw an article about today, is whether or not I watch insider activity. And for those of you who don't know what it is, insider activity is simply the buying or selling of company shares by corporate executives. Now, because they're officers in a publicly traded company, the executives have to disclose when they're buying or selling shares. So that seems fair. And, simple logic would say that, they would buy when they expect prices to go up and they'd sell when they expect prices to decline. But I really don't think it is that basic. Let me explain what I mean. For one thing, corporate execs are not professional traders. So to take market cues from them and what they're doing is more than a little bit suspect, if you ask me. Second of all, while the motivating factors for buying a stock might really only mean one thing, you think prices are going higher, I think that the sale of shares might mean any one of a number of different things. It could be that CFO that you've seen selling shares has a big boat that he'd like to buy, or maybe he's got a summer home in the Hamptons that he's been watching and the price has finally been coming down to a level where he's willing to put in an offer. Maybe he's raising some cash to put Junior through that Ivy League school, or maybe he's just trying to pay the bills so he can take his wife on a nice trip to Paris. But, maybe he's been trading on the side of his regular job, and could be that he's got a big margin call that he needs to meet in his brokerage account, And finally, of course, maybe, just maybe, he thinks that his company's stock price is going down, and so that could be a motivating factor. But before you place too much weight in that last reason, consider a number of different things first. He's likely to invite some other sellers to join him if they go ahead and interpret that as a red flag. So that's going to hurt the prices where he may finally get filled on that sale. Second of all, he might sell shares on a regular basis. We've heard of people like Bill Gates of Microsoft who sell shares consistently over time, and they've done so on a regular basis just because they have so many shares, and it's a wise thing to be in the habit of doing. It's not trying to predict market direction. It's simply making a regular habit of raising cash and keeping that bank account fat. So, finally, be sure and compare previous sales with previous stock prices. Before you start taking all your trading cues from some corporate accountant, remember that even if you've figured out what his motivating factor is for his selling, his timing could be way off. Sometimes he might even be dead wrong. Now, my personal take, stick with what the charts are telling you. Insiders are not the market, and so if a stock is headed north or whether it's headed south, it's likely to be apparent in the chart. So reduce the information clutter, which might only serve to cloud your judgment, and stick with what the chart patterns are telling you when you're making your buy and sell decisions. All right, thanks for joining me once again for another episode, and I will be back soon with another video. But in the meantime, trade like a bandit.